What's up, crypto junkies, and welcome to our latest video training series. This series is sponsored by Haas Online Software. Haas Online Software creates one of the best auto trading bots. This bot will allow you to trade cryptocurrencies at the speed of professional level without the 20, 30, 40 years experience, my friends. What's up, crypto junkies? It's Jay, and welcome to part 2 of the 10-day trading series. This is take 2 of day 2, part 2, because apparently OBS decided to take the magic that I had created over the span of an hour yesterday and completely not give me audio.
Pull it up.
Can't wait for the new studio. Here's what you can expect from this video. We're going to talk candles, we're going to talk charts, Fibonacci sequence, moving averages, RSI, Bollinger Bands, and probably a few other things I've forgotten. All of these sort of basics that you need to know for analyzing a market, doing your TA, technical analysis, to a degree. This isn't super deep technical analysis at all. There's other videos on YouTube by traders 20, 30 years. You might want to look into that. This is just the basics to get your feet wet, how it applies to not only the Haas Online bot, if you wanted to paper trade yourself. Also, we'll wrap up and end this video with talking about paper trading and backtesting.
Fantastic.
The thing you got to remember with what I'm about to share with you is that all of these indicators that I share with you and these tools, they're not all going to be relevant to using a trading bot at all, actually. But they will allow you to be able to see what's going on in a chart and have a roughed out idea of what's going on. And from there, decide if you want to use this pair in the bot or not. Now, the thing I will say is that the bot has a simulation mode, which we will get into in part 3. And if you were to do nothing else but use that bot and use the simulation mode, I would suggest you do it. Like, I would rather have you go and you have no clue what's going on, but you go and get started and actually do something and you lose your ass with the simulation bot than do nothing. If you were to dive into deep end and just throw yourself in there, I think would get you excited enough to now come back and learn these basics and learn enough of the basics to make smarter decisions and actually know what's going on with the trades, okay? But if you think that you need to really be kicked in the ass, then you should just go get the bot and dive into simulation mode and just start losing your ass, because it's not real anyways. Nobody's getting hurt, no money's getting lost, and it might just be that kick, it might just be that spark to get you moving forward. And if it does only that, then trust me, you are better off than the 99% of people who are just waiting and watching on the sidelines.
Then move to...
I hate this channel.
So we're going to go through 2 tools today, which is TradingView.com and Coinigy, or Coinigy, however you want to say it. Coinigy. That actually sounds way more gangster when you say it like that. You know what I mean? Just picture like an old Italian guy saying that. I think that could do something. All right, so we got a plain chart, just like an unsexy plain chart. We're going to come back to that in just a second. Now, TradingView is paid, okay? I have a pro account. You see, I have no idea how much that costs. I can't remember. And then Coinigy costs money too. So if you're balling on a budget, probably just get one, or you could even go with none, because the Haas Online bot has a charting tool in it that has indicators and all the fun stuff that you see here. So you could get away with even just using that. But overall, I would say at least TradingView, but Coinigy allows you to link up all of your exchanges. I'll do a solo video on this too, like the whole setup, and I'll go through and buy it. That's why I haven't bought, and it'll be a reveal video or unboxing, however you want to call it, and we'll go through it together. But these are all the major exchanges or markets. Like, this is Cryptopia that I have pulled in. So this is Electronium that I'm actually looking at right now, which you could not get good data on if you went to cryptopia.co.nz and looked at this pair right now. I can come up here and get every single pairing on Bittrex, Bitfinex. Almost, I mean, look at this list. Oh my God. And they're always expanding on new markets. So this is like the ultimate trader's tool right now. Everybody's on this platform, okay? And TradingView is just a basic version of that. Now, TradingView, understand that this is pulling in people from all over the world. Forex, S&P 500 people, NASDAQ 100's on here. Every market is on here on TradingView. So you are mixing all of those worlds together.
Teletubbies jump.
That is giving you a huge database of knowledge and professional traders. This is where they hang out. This is the charting tool. Coinigy is for crypto guys. TradingView is like everybody. And a lot of crypto guys aren't on Coinigy because the TradingView has this whole community. Again, I always like to hack, right? And cheat if I can, like leverage people who have more knowledge than me and learn faster. I'm 100% into that, okay?
Shut up.
So for here, we can just come up to top authors and we see all these pro authors with all these views on their charting analysis and the trend and everything else that they've basically backing up what they've posted. Not all of this will be on cryptocurrency, so you just scroll through and take a look. This one's on Bitcoin Cash, so if we wanted to learn about how this guy's charting that and maybe get some intel, we could look at that. If we wanted to look at Bitcoin, a long opportunity, you got to look here, long, and some are shorts. And look, this is Great British Pound to Japanese Yen. This is BTC to US dollar. And these are all different people from around the world trading, sharing their charts. Like, that's how you learn fast. They also have a live chat over here. That's mostly just a troll box of people talking shit, but there is a lot of really good information as well. And then I've got my watch list up here. We've got more news pulled into here, and then we've got our market summaries. Could just jump over to crypto, and here is a glimpse at that, okay? Top authors here, week, month, all time. To see, you got all time top authors. These are the guys to follow. So you just come in here and look, it works just like Twitter. I just come in, where's this stuff at? So I can follow and message this guy. Boom, follow. And I can go to his profile and look at everything that he's published. Like, this guy's been here for a while. What is that reputation? 109,000? Oh my God.
Oh my God.
Because in a world of all pro traders, it's hard to bull. So the guys who are popular for a reason, because they know what they're talking about. So here, his chart, he's got the MACD, RSI, DMI, which I don't even know what DMI is. And he's got all of his support zones and resistance zones, you know, kind of carved out. He's got Bollinger Bands, and he's got rolling, or excuse me, he's got moving averages. There we go. First off, fully tap into the tool that you have access to, which is TradingView. Cheat, hack it, however you can to speed up your learning and your knowledge. If you want a professional trader to learn from, you could just message these guys and say, hey, can I just like pay you $100, $500, $1,000 to like give me, you know, 5 lessons to bring me up to speed on how to read charts? This is the kind of thing that I do. This is the kind of thing that I've done to get my knowledge up until this point, is I just go find a guy who's the smartest one in the room and I say, hey, can I just pay you to tell me what's going on with this? Sometimes they say yes, sometimes they say fuck off. Just depends on the person, really. And I'll find one out of the group that will say yes. That helps me. And so then I advance my knowledge really, really fast. I didn't need 5-10 years, right? I hacked the learning curve on this. And I think if you take away nothing else from these series that I start doing, it's that I'm always looking with this sort of angle and frame. How can I learn this in the shortest amount of time? I believe that to be possible with everything. Most people don't, okay?
Cool.
Okay. We could start looking at this and we could start making some assumptions and trying to figure out where his head was at. Oh, and we can read the big write-up that most of these guys give as well, where they're talking about their predictions and their if this, then that scenarios. They're just painting out a clear picture for what's going on. You watch and read enough of these, you start to be able to pick things up faster. Oh, that's what that means. Oh, that's what he was doing there, right? So one of the things that I did in the very beginning is I watched hour after hour after hour of live chart analysis. And most of it, I was just like, what the hell is going on here? And that's before I even knew what Chinese candles were or what any of this stuff actually meant. And what's funny now is that I know some of the indicators in just reading candles, and I know how to use Bollinger Bands better, and I know how to use all these pieces better, but there's always like this deep-seated reference that I have from all the stuff I watched in the very beginning. I never forgot that. I still have that in my memory bank, and I can recall it, and it's triggered at the weirdest of times, and it's triggered sporadically. As I'm reading charts, there's all this like underlying data that I'm pulling from. It's almost like this memory bank and this genius deposit that I'm pulling from. We talked about the resource tool itself. Get involved with the community. Come in here. If you want to learn it faster, try and pay somebody, give them some BTC to teach you, give you a couple hours on the phone, and get the basics down if you feel you need that, all right? But we're gonna start at the very beginning. The 2-cent answer, green is good, red is bad. Green means that it opened lower than it closed. Red means that it closed. Well, the opposite of what I just said. Red also means more people selling than buying, and green means more people buying than selling. Next, let's talk about these little thingies. What are these? These are the shadow, or what most people just call the wick of the candle. They are indicators in and of themselves. I'm going to give you a handful of indications within Chinese candles right now. This little plus sign is what's called a doji. It basically means indecision. It means like, I don't know. The market's kind of saying, I don't know. I'm going to talk about a bullish engulf and a bearish engulf. This is a bearish engulf for the most part, because what it means is that the red candle is engulfing the green candle. So it is eating the green candle or overshadowing the green candle. The bigger the red is, or the more green candles that it's engulfing, the stronger the indication is that what? The market's going to turn, that there is going to be more of this selling versus buying in the market. Okay, and that might be enough with maybe another layered indicator of an RSI or Bollinger Band to tell you and give you an answer that's determining your entry points, or just determining, is this a coin that I want to pair up in a trading bot? Entering the market on a manual trade standpoint is quite different than the bot. The bot is like, lateral movements are the easiest for the bot. This right here is the easiest for the bot to trade and make money on. When we're talking about trading ourselves, like, that's when we want to get into Fibonacci sequences. That's when we want to get into running multiple indications and doing a more complete technical analysis on the coin itself. With the bot, you could even start off with just like, oh, I like Civic. Let me just trade Civic. And as long as it's not sitting on the bottom, you know, as long as it's not completely bottomed out, like here's, let's say this is 0 and it's way down here. As long as it's not sitting like that, then you're in pretty good shape, okay? You can make that assumption. Even if it's at the bottom, there might be room for it to come up, which is where some basic indicators could tell you, like, okay, is this about to trend up? Are we about to get a big run up on this? Oh, we got a hammer. Okay, we got a hammer. So a hammer is this right here, this green one. This green one is a hammer as well. It just means that the wick down is very big, at the top it's very small. Basically looks like a hammer. Okay, so in a bear market, and really the hammer is a bullish signal, as long as a green candle next to it is closing above the top of the wick, then it's a pretty good confirmation or additional confirmation that we are trending up. Is the start of an indication that the market is about to shift or go up, okay? And the last one I want to share with you is a morning doji star. The closest I can find is this little cluster right here, which would be this red, this green, and this green here. It should be a 3 sequence of candles. This is a 5, but basically we have this smaller red, then we have a hammer or a doji, which this is more of a representation of a doji. Then we have a green, which is almost engulfing the red, okay? Okay. So the doji basically means that we were going in the direction of more selling than buying, but then there was indecision. And now we have this big run up green candle here. Like, if we would have just operated off of this indication right here, you see that we were, for the most part, correct. And the next candle after this one further confirmed that we were in an uptrend, all right? And if you were to zoom this out, then you would see that this is a 4-hour chart, by the way, meaning each one of these candles is 4 hours. This is 4 hours, 4 hours, 4 hours. They represent a 4-hour increment. If I had it set to 1 minute, 1 minute, 3 minute, 5 minute. So most people don't even know that, actually. Let's start to layer on some additional indicators. Now, what I love about TradingView, and this is something that I love about the Haas trading bot as well, there is a public library of indicators that you can access. So if we go Bollinger Bands, this public library has been created solely from the community. So you can use other people's scripts and other people's indicators that might have taken them years to figure out, and you can just apply it to your charts right now. That is epic, okay? And the Haas trading bot does very, very similar to that. They have a script library that has been created by the community that you can access as well, okay? All right, Bollinger Bands. What the hell is Bollinger Bands? Created by a guy, what was his name? Something Bollinger, duh, back in 1980. This correlates a lot with RSI, meaning that the peak, and when we go beyond the outer line here, means that we are overbought. And when we go below the lowest indicator here, means that we are oversold. So if I were to pair this up with relative strength index, or RSI, we start to get some correlating data. Now, I will also say that the more indicators you're using on your charts does not mean that you will be smarter. Also, too, I have to tell you, and burst your bubble, that there isn't one indicator that's the end-all be-all that will just give you the magic answer and you'll go and make millions of dollars tomorrow on Bitcoin.
the motherfucking Eagle Double G.
I know it sucks. Kind of was hoping for that too. So we use a combination of a few different indicators to make smarter decisions on entering and exiting markets. Now the Fibonacci sequence in and of itself, retracement and extension will be great tools for manual trading, decent tools for a bot, but yeah, we'll get into that in just a second. So RSI overbought is anything conservatively above 70 and oversold is anything below 30, but a lot of guys go 80-20. It's a range, you know, it's really like 70 to 80 is considered getting into overbought territory and 20 to 30 is oversold territory. This right here, you'll see the Bollinger Band kind of correlates with where we dip down and become a little bit oversold. And up here, when we are a little bit overbought territory, what are we peaking on this? We are a little bit overbought here as well. So this starts to tell you the story. To rewind for a second, I missed the key piece that I wanted to give you. And that is that these candles, they are giving you a story. The chart is telling you something. It's telling you how the market is feeling, and it's telling you where the direction it's going to go. You just got to listen. And the more you study these charts and the more you look, the better you will get at listening and watching. And so I mostly, by the way, I mostly operate in a 3 or 6 hour, but I guess if you are watching something and really keen on seeing where it's going, hour by hour would be a good one for you. So let's turn back on Bollinger Bands. Here we go again. RSI is slightly correlating for the most part. We become into this overbought territory and we're starting a little dip down. And also too, as you change your timing here, you can start to see, oh, are we starting to break out and go down? Are we starting to come up? That's where I think a lot of the true use of these indicators come in. You don't have to zoom in, zoom out for that one. I'm not even going to bother. But on a 3-minute chart, we can start to see, okay, this is giving us a little indicator there. But if we were only looking at a 1 day, we might not see that. We might just, well, okay, there's small corrections all over the place. There's small corrections just here earlier in the week. So what does that mean? If we were, and this is a little slightly less obvious on this chart with Bitcoin, but on altcoins, you can really start to see these taking shape faster. Stosh is another one, S-T-O-C-H, is another indication that you could use with RSI to tell you like on a shorter chart or a faster chart. Yeah, so Bollinger Bands and RSI start to tell you a story. Bollinger Bands is one of the key indicator sets that a bot will use. Like Gunbot, what most people use with Gunbot is Bollinger Bands. Haas Online bot, you can use Bollinger Bands. So you can decide to just run like that, which is fairly safe. It doesn't guarantee that you're not going to get stuck with a bag or two if the trend were to completely turn on you. That's where you would want to continually keep an eye on the trend so that if it does turn on you into a downward trend, then you're not trying to run Bollinger Bands on a downward trend, which might not make sense and it might keep you holding a bag. Also too, as I've mentioned in the first part, you should decently be able to accept that you will be holding some bags and you should be okay with that. If not, then don't even get into the coin in the first place, because if you fall asleep or pass out or screw up and you're left holding a bag, then you're not going to like it. So just make sure that it's a coin that you wouldn't mind holding a bag in. And I'm going to give you guys a whole list of these resources, not here on the public YouTube channel, but in the private Discord. And this tells you and gives you more information about Bollinger Bands. Who was it? John Bollinger. There we go. And so this, again, reiterates what we're dealing with. It's really a volatility tool. You might want to read this up to actually get a definition of what the 3 bands mean and how all this data correlates together, so that you can, you can decide like, okay, do I like this indicator or not? But this one with RSI are pretty good, a pretty good pairing as indicators, which you can do moving averages, which is just MA. Exponential moving averages is EMA moving averages. And then what's the third one? It's SMA. I can't remember what it stands for. This is the stock settings here, but you can change this if you were to come into settings. You could change the timing. So we have a fast length of 12 days. This is the 12-day moving average, 26-day moving average, and 9 is the distance between the the blue and the orange, and the pink is the histogram. Now, what you're looking for here is, and if we were to roll this in with Bollinger Band, let's just see how these two work together. So what we're looking at here is when the blue goes over the orange, in this case, then we're mostly looking at a change in the market. We're looking at a bearish market, and it's not guaranteed, but you can make a safe assumption that this is a bearish market. Okay, so when the bottom crosses over the top, which in this case our bottom line is the blue, right? When these lines cross over and there's this convergence, that usually means that there's going to be a market change. That's usually heading towards a more bear market. The blue line is the 12 and 26-day correlation. The orange line, yeah, the signal itself. So that's the gap between the two. And then the pink is the histogram. So I was right. When the blue goes over the orange, we should see a change in the market. Okay, so here we go. And we can almost see if we were to go. And this is called back testing. What I'm doing right now is just simply back testing. I'm going and saying, okay, is this true? Am I fully understanding this indicator? And let me test out my understanding of this indicator by going back in time in the market on this coin and double checking it. Okay, so here we got a crossover again. I had a crossover here, which meant it was breaking out, but we were going back over the orange, and now here we go, we're coming down, and then we're crossing over again, and we're back on top. And so you see what's going on here. These indicators are very strong telltale signs of what the actual market is about to do. So MACD, I don't actually use that much, but I like it a lot, and it works with Bollinger Band pretty decently. RSI and MACD, I think, are really, really good.
Hey, that's pretty good.
Most guys use Bollinger Band, MACD, and RSI together. They all kind of will point you through different means in the same direction. So all three of those work really, really well together. So here's what it would look if we max this chart out. This is part of the reason why you want the pay to count too, because you won't be able to see all these together. And you could look at these three together, and they are correlating data together, okay? Yeah! They are giving us a combination of all similar things. They're all kind of saying the same thing right now. This blue is underneath the orange, and we've got an indication here that we're going to come down, and it's now going through a small little correction phase. And we've got indication here because we saw the crossover and we're below the orange and we're still heading down. So there's another little indicator that we're heading down. And if you look at the candle size here, we're still more selling than buying. Safe to say we're going through a little micro correction. Now, this is where more of the advanced stuff comes in, to where it's like, okay, what does that even mean now? Because does that mean that we're going to keep going down? What does that mean? Oh, that is where support and resistance lines come in. Support and resistance lines are simply the price in the market that was supported in the past and resisted in the past, meaning we support this price. Every time the market tries to go down and test lower than that price amount, the market says, nope, we're okay. And so it might go down and test, but then come back up, and it seems to float and be supported by this dollar amount, okay? Which a lot of times these are round numbers. So it'd be like the 6,000 to 6,100 range, the 7,000 to 7,100 range, 7,500, 8,000. The big round numbers seem to be supported a lot in crypto. Support is previous support points in the past, and resistance is that it couldn't just quite, we tested that number, and then it fell back down, and we fell back down, tested, fell back down. So it can't quite break through that support or that resistance point. Once a resistance has been broken through, it can then become a support line. What you could do is you could just come back, and let's switch over to a 1 day. You could go back in time. Let's shut off these guys, give me more graph space. So you can come at the very end and chart, or you can kind of go back to the beginning. Here we go. And we just rewind in time, and we can start to pick our support zones, which the more you start to do this, and if you wanted to practice at one thing, you could just simply come through and just say, okay, well, where are my support zones? This looks to be one right here. It means the market was supported. We have some longer wicks touching down into there. It might be a little bit off. It might actually be like right there. Support and resistance was support and resistance was created on this line. Here's another one up in here. Got another one. And these are all of them. So you could just come through and layer. Like here's another one even in here. We've got one right in here. I don't know why it doesn't stay on this indicator. And you could come through and layer what would be maybe even dozens of support and resistance lines. And that might get a little bit cumbersome, because it's like, well, then where are my big ones? Where are my big moving lines? How do we figure that out? Well, you guessed it. We are finally going to come in and talk about Fibonacci. Two tools to work with here is a retracement. A retracement means we are retracing a previous pattern from before. And with mathematics, with very high certainty, we can really bank on these numbers, and we can make a lot of assumptions with these numbers. This one is fascinating to me, and it's based off of Fibonacci, yes. So we could come and pull off of an all-time market low, which is right here, and expand this out into the future. Oops. which would look something like this. Or we could go and we could do a trend-based extension, which would tell us entry points for the future. So some basics here is that with the retracement and what that's giving us is we can start to make some assumptions and we can start to find our entry and exit points. On an upward trend, we want to buy down here on the pullback, and in a downward market, we would want to buy on the peaks. Okay, so excuse me, we'd want to sell on the peaks. So on the way down, we would be selling right in here as this continued to dip down and correct down. And the Fibonacci retracement and the extension tool will help you make those smarter decisions. Also, too, they'll paint out a lot of the truer support zones for you, okay? So it's not that the line is the 100% truth, it's that zone is really the support zone. And so all we need is additional confirmation is for it to test. And this 50% line, even though this isn't a part of Fibonacci sequence to begin with, it's not, it's just put in there, but this is really considered by many to be the entry zone. And all we're looking for is at the 50% line for us to start now looking at this for an entry point, okay? And then as long as it tested on the support, then that would be our additional confirmation to go ahead and enter in, all right? Again, this might not apply on the bot because the bot we just set up and we kind of unleash it on the market itself. But the bigger lines to look at are these are percentages too, by the way, are the 0.618 percentage. The 382 is common. The 116, and they don't have it, but there's a 13 as well. But if you look, a lot of these lines that I'd previously drawn out that I had no clue about are support lines and fall with the lines on the Fibonacci retracement here. We skipped this line here, so my retracement might be a little bit off, or we might have just skipped through this zone, okay? Remember that it's not necessarily that it works within the 1 to 786, 786 to 618. It might go in blocks of 2. So if you look, we're tight in this zone here. We're tight in between the 618 and the 5, but that's not necessarily true going back historically. These are all a bunch of indicators that you can go and watch training from TradingView themselves. They do quite a bit, and so does Coinigy. You can retrace a trend. All right, let's try and find the absolute bottom of this trend. Let's try and find the absolute bottom. What are we on, the 1 day? Yep, okay. Which would be like right here. And let's try and go up to the top. Or we could come even further back. You don't want to go as far back as here. I don't think that would be as accurate as coming back to a recent point in time. This is July of 2017. So now let's grab my guy. We're going to go from the lowest we can find there, the tippy toe point, and the highest wick we can find there. And we can pull this all the way down to where's our zero line? Our zero line is right here. Matching up with our zero line, okay, right here. And if you look, a lot of the support and resistance lines that I queued out probably are falling on this. Yep, we got the 786 falling smack dab on there. And so this retracement tells us that where is things going? Where could the trend be going, okay? Okay. So the 1-6 line is somewhere at 9,000, 10,000. This is 97 to 10,000, which is why a lot of guys are banking on and almost guaranteeing the fact that Bitcoin will hit 10,000 because here is another big zone for us to cross into, which is the 1.618, all right, line on the fib extension. Here's another big zone right in here. As you can see, we've gone lateral movement through a lot of that zone, and each one of these going back through and looking down will give you an extreme amount of data. Okay, so if we were to just come over to Investopedia, which has quite a bit. I mean, look at this. There's 4 huge ass sections of what Fibonacci channels, clusters, fanning, and extensions are. But the extension overall, here's their definition of it, is used to predict spaces of resistance and support in a market. We can make assumptions based off of that to decide our entry points and our sell-off points so that we can create our sell orders and obviously increase our positioning in that coin, right? Yeah, this is the nuts and bolts of it, and it goes into, this is pretty good tutorial stuff that Investopedia has. This will be a lot of the free resources that I provide for you guys in the additional training underneath the video. What did I want to get into next is we talked Bollinger Bands, we talked oscillators. Oh, I wanted to talk about Coinigy. You can do paper trading down here. I've never done it, but you can. I heard it's pretty easy. We can test strategies here, meaning that they have what's called a Pine editor. It's just a code editor I think it's Python is the coding language. You can make up your own stuff and then test that strategy in the market and see what kind of result you would have gotten. That's a very manual process. The bot will allow you to do that as well, and you can jump around in simulation mode and test out your strategies. But paper trading is literally getting out a piece of paper and keeping track of your positions. This is also, it could be simulation trading, meaning that you're not dealing with the real market yet. You're just testing out. You're trading on paper and not actually executing these things just yet. So it's a great way to practice before the big game and a great way to familiarize yourself with your strategies and what indicators you like. Coinigy, you can do the same thing. But here's all your info up here. Here's my 1 hour, my chart breakdowns. I've got this set to Chinese wicks or candles. We could do hollow candles, bars, lines, area. But you'll see 99% of people using candles because it's just the easiest one to use. And we can shut off our volume here. You see volume right here. You just shut that off. And we've got a clean chart to work with, all right? You can also, what I'm hiding on Coinigy here, is that you can do your trades right from within here. That's why you hook up your API access to your exchanges so that you can actually execute buy and sell orders right from within the software. So talk about, like, for a manual trader, this is like the ultimate little tool. And the real-time data that you're getting, like, it's pretty close. Like, what are we in right now? Let's jump into a 1 minute. And a 1 minute real time, we should literally be able to see the candles forming. Yeah, so you can execute trades right from within here. I think both tools are great. If you're gonna get into the bot, I would suggest Coinigy, because then you can do side-by-side manual trading and be executing trades yourself and have the bot running, so that you can kind of have the best of both worlds, because the bot will only do so much. It won't guarantee that you don't hold bags. It won't guarantee that you're gonna be executing the most perfect trades with zero loss. Only you can do that with skills and expertise as time goes on. So I would suggest that you kind of run your own trading side by side with the bot. As long as you've got enough budget in your exchange, you'll be able to do that. And by having access to all of these exchanges that you could just link up your API access to and jump around immediately versus having 5-6 tabs open, you can see how this tool is insanely good, insanely valuable. All right, so I think I covered everything that I wanted to go over. In the next part of the series, we're gonna actually jump into the bot and do simulation trading and show you, the ins and outs of the bot itself. There's a 2-hour tutorial that they actually have showing you the feature set of the bot, so I'll stay away from that. Also, I'll stay away from, hey, this is how you set it up on a VPS, but you will see me in there, and we'll start with simulation trading tomorrow to get your feet wet, and then after that, we're gonna start to jump into some real charting and trading, which what I'll then be filming in the segments is my charting and my TA, and then also executing the trades and running the bot, coming back and checking in on the bot and seeing what it's doing and talking about the strategies that I'm using in this coin pair versus that coin pair. We'll start going little by little through some of the different sub-bots that the Haas Online bot has in it. All right, so that's it for today. That's it for the part 2 of the trading series. Thank you so much for joining in. Of course, subscribe to the channel, like this video, place a comment below. That helps us, spread the awareness. That helps this video get out more on the YouTube algorithms. And of course, stay tuned for part 3 of the trading series, which will be launching very soon. See ya. All you have to do to get your own copy of the Haas Online Trading Bot is simply click on the link. You'll be dropped off at the home page. Click on the pricing tab at the top, which will redirect you to the 3 different license options that they have. They have the beginner license, the simple, and the advanced license. I suggest if you have 0 trading experience, you go ahead and start with the beginner. If you have experience with trading, reading charts, and actually executing trades on an open exchange, then opt for the simple or maybe even advanced license. Once you've decided which license you want, click on the green Buy Now button and it will redirect you to pick out how long or the duration of license you want. You have the choice between a 3-month, a 6-month, and a 12-month license. Once you've made your decision, go ahead again and click on the green Buy Now button and you'll once again be redirected to now the cart page. You have to decide how many of the licenses that you want. I'm going to stick with 1 and click on Add to Cart. This is where one of the insanely great benefits of being part of the Crypto Junkies community comes into play. They have set up an exclusive discount code for our community, which is, we type that in and apply it, and it applies almost a 20% discount to our cart and to our total price. You'll see that coupon code applied here, and when we're ready, we just go ahead and click on this purplish proceed to checkout button. Now, we're gonna go ahead and be redirected to where we have to put in our billing details. So let me just go ahead and do that. We scroll down to the bottom and we have two payment options, a Bitcoin payment, or we can pay with our BitPay account. We check the box that says I've read and accept the terms and conditions, and finally place the order. If you've selected the Bitcoin payment option, you'll be able to go ahead and send the money to that address. And if you've selected BitPay, you'll be able to go ahead and process through using your credit card. Congratulations, you've gone ahead and gotten yourself all set up with the Haas online trading bot and you're ready to go. Now all you have to do is log into your account and you'll see under the Downloads tab all of your downloads, your license key, and all the information that you need to go ahead and take the next step and start using your brand new trading bot.